Hey, welcome to the closing beat, everybody. Happy Tuesday. How you doing today? Hope you're having a good day there. This is just a quick show that we do called the Closing Beat. It's a quick stock market update show. We just go over the good, the bad, and the ugly sometimes in the stock market to let you know how things are going. We're also playing a game. It's called Guess the Dow. If you want to guess the Dow, if you're the closest without going over, we'll send you a $100 gift card. Each Friday we make that announcement. As long as Friday is a weekday, we will announce the winner then. You can go right on the website there. There really is no catch, right? You just submit your information there. We won't market to you, sell your information. We won't do anything unless let you know you won. If you did win, we'll offer to send a gift card. If you're one of our customers, we'll credit your account as well. We're also building a wall of dough. It's in the works here slowly at Jazz Wealth, but we've been saying if you have any currencies that are interesting, or if you want to just take $1 and sign your name on it or something, when it's all done, we'll take a picture. And if you ever stop by, you can, of course, come hang out and take a picture against the wall of dough, if that matters to you. Anyways, want to thank Tien. Sent a really beautiful Vietnamese dollar, I guess. It's 200. So if I can just zoom in there and show you, how cool looking is that? It's all one color, sort of see-through. On the front, there's some kind of like watermark, but it's in like a rainbow there. I find it pretty fascinating there. So I just thought I'd share that with you. Thanks, Tien, for sending that. That is going on the wall of dough. Thank you so much for sending that. All right, let's talk about the stock markets here. Oh, by the way, we have a class this Thursday. Every week we do a class for customers. This Thursday's class is going to be on the stock market and our portfolios, the updates, any things that we did to them. We manage our own portfolios here, so whenever we make changes or sort of want to forecast changes to you, well, we're always going to let you know ahead of time. So we'll be covering that class as well as like really geeky stuff to let you know about the markets, how things are moving, and we expect them to move going forward, just for fun if you're interested. So if you're one of our customers, that'll be Thursday, 8 o'clock. Every class is always Thursday at 8 o'clock as well. We're also building, like, if I could turn the camera around, we're building a jazz club. So it's like an old smoky jazz bar looking thing. It's really cool. I'm like super excited about it. But we're going to start doing maybe some live Q&A classes here on YouTube. If it helps you there, maybe I could teach something to you guys as well. Because sometimes you guys get left out, you know. You're like, I don't need Jazz Wealth, man. I still want some help and some stuff. So we're trying to make sure we stay within the regulations there, but help you out if we can. Let's talk about the stock market. You got the Dow lower by 313 on the day, almost low through at the lows all day long. We had a little rally there. S&P down 45, the NASDAQ down 132. Let me try something here. We're going to go outside the norm. We're going to be a little bit different today. I don't know if you can handle it. You ready? Here we go. Let's take a look. So here's the stock market, only I'm doing something a little different. I'm breaking it up throughout the day. So here's the start of the day. This is 9:30 in the morning. Now I'm using the futures market, so you're seeing some futures trade all the time. So we're going to start right here at 9:30. Market's opened a little bit lower. You don't see it here because this is the futures market. Actually, can I help you out with this? Yeah, let's do it like this. This will make it easier. So here's where we closed yesterday. This morning we opened a little bit lower on the day. The drama for the trade talks and stuff is just really picking up there. And apologize for the rain. It's a rainy day here in Florida, so maybe a little noisy in the background there. It's not static. Your speakers are fine. It's just rain and a lot of it, by the way. Anyways, so we open a little bit lower on the day. The Commerce Department says we're blacklisting 28 companies, 28 Chinese companies, by the way. And the Chinese say, oh, we don't like that. That's not cool. You know what? We may leave the trade talks early. And so throughout the morning as that news came out, the markets basically hovered near the lows. Now, a few weeks ago, I believe it was Bloomberg, maybe Bloomberg put out a study about how much money in TSPs is actually going to China in the form of the different investments that they have. Well, the White House looked at that, and today they said, we don't like how our government pension money is going into China, so what we're going to do is try to stop that. We're going to find a way to look at that. And China reported back to that and said, oh boy, yeah, you do that? Quote, stay tuned for our retaliation. So a little back and forth in the morning between the countries there. I bet you that wouldn't even have made news if it wasn't for this sort of back and forth with China right now. Anyways, it did make the news. Trump also says he doesn't really expect there to be a big deal that comes out of the trade talks this week. He's like, yeah, whatever, there could be a deal, but you know, he doesn't really expect anything. So he really downplays it. And then the Chinese tweet out, you know what, we're not expecting a deal either. We're in no hurry. No, all of our people in China, we're all prepared for no deal anyways, so big deal. So the markets really had nothing but sort of like a stalemate going on early in the morning. Now, we had a little bit of a rally going into the afternoon because we had Fed Chairman Powell speaking. So he was giving a little bit of a talk there, talking about the repo market and how they're going to add to the balance sheet just for that. But this isn't QE. That's not quantitative easing. We're just going to try to fix a little something over here, and don't worry about what we're doing, basically. The market's sort of like that. Everything started coming up off the lows. And China even reported, there was a report out of China that said, you know what, we had a rough start to the morning. We're still going to proceed with the trade talks this week, and we're going to do it calmly. Quote, calmly was their words there. And so that lifted us off the markets throughout the day. Again, this is a 5-minute chart. You're just seeing the market's performance throughout the day. We got a little bit off the lows, and then bam, right as Jerome Powell was speaking there, the U.S. basically said, we're going to put restrictions on the visas of Chinese officials because of all the inhumane stuff going on over there. They basically just put that out there as sort of a side note. And, China was like, oh, okay, yeah, we're back on then. Yeah, so we're not friends anymore. The market's basically closed down near the lows there. And remember, October 15th, which is coming up, by the way. Yeah, we're cranking here. October 15th, we got the $250 billion worth of tariffs. They'll go from 25% to 30%. And so the idea is that they're trying to, solve that problem. Maybe that would be the good news that comes out of the Chinese trade talk, is that they're not going to raise those tariffs and they're going to continue talking or something. But right now, yeah, it's not looking too good. The drama is really, really heating up there. And so because of that, you had every sector lower on the day today. We'll go through a few of them here, but you had 9 sectors lower by 1% or more. So pretty much a down day across the board. Volatility is also starting to spike a little bit there as well. If I can go over to the Volatility Index, if you happen to follow that, I don't know if you do. This is basically just the level of fear in the market as represented by actual contracts traded on the S&P 500. So what the real simple way to look at this, if you don't want to learn what all that means, is the higher we go, the more fear investors have relative to their portfolios, meaning they're starting to protect their portfolios because they're fearful of the markets falling. The lower we go, the less fear there is. And there's a local radio host here who has the best way of saying it, man. I remember this since I was a kid. He says, when the VIX is high, you buy. When the VIX is low, you go. So the sort of a credit to him there. And so the VIX headed back higher, which just means there's more fear in the index. And if that means the markets move lower, then the idea is if you're a long-term investor, when the VIX is high, you buy. That's your opportunity. When the VIX is low, hey, if you got some profits you could take, or if you can go away for a while and just not pay attention to the market, that's cool. What I want to point out here, going through a few of these things, is we're kind of in no man's land. Would you say the VIX is high? Grab your child, have them come over to the screen real quick, have them look at this and go, would you say that this green right here, from this point in time, is high? Don't tell them anything else, and just see if they look at this and go, well, I don't know, it doesn't seem high. There's other areas we've been higher. It kind of seems middle of the road. Then ask them, does it seem low? Well, no. I mean, there's some low down here. We're kind of in the middle of the road, maybe a little towards the higher end there, but that's what you got. And really, that's what a lot of the market looks like if we were to sort of dig through some of this stuff. We'll look at the financials today. I use the XLF to highlight the financials. Basically a weak day all around, right around the 200-day moving average. It did try to bounce throughout the day. They tried to lead the markets higher, couldn't do it. But now ask them the same question. Are we high or low here? Is this representative of a discount, or is this representative of something that's overpriced? Well, we're not overpriced because we've been higher. We're not really discounted. We've been lower. And so right now you got nothing. Right? If you're brand new into the market here and you're like, where's the discounts? It's not here. You really don't have much to choose there. If we go over to semiconductors, maybe on the high side. You guys know how I feel about this one. I've left this line here for the longest time. I think people are just waiting for this trend. I think that's where people decide that's a discount. And so for right now, there's not a whole lot of action on the upside, not a whole lot to the downside. And so you're sort of stuck in no man's land there. In fact, there's so many different areas of the market where we can't say it's a discount and we can't say it's overbought. Here's regional banks to kind of point out one. We go communication services. We're sort of coiled up here, not really doing a whole lot. And because of that, people are focused now on trade, and they're focused on the catalysts of earnings coming up, really starting next week. And so you've got a lot of that. Doesn't matter where you look. You kind of see that same thing. Consumer staples. In the short term, you could say it's maybe overbought. I'm sorry, in the long term, overbought here. But in the short term, there's no real discount to speak of yet, and it hasn't really blasted off to new highs or anything. So you've got a lot of the technical patterns in the different sector ETFs and the different sectors of the market sort of in limbo, right? It's kind of like, I don't know what to do with that. You're kind of in a holding pattern there, and that's fair. It's fair to say there are times where you just kind of hold and you hold on and see what happens. All right, stock-wise, you got Domino's Pizza in the news. Did I move that? I'm sorry. Yeah, Domino's Pizza in the news there, 4.5% higher on the day. It stopped its rally there at the 200-day moving average. This one's kind of interesting. They missed on earnings, missed on revenues, they missed on sales, and they were kind of like, yeah, but you know what? It's really because of DoorDash, it's because of Grubhub and stuff. They're making it easier for the smaller pizza companies to offer delivery without a large cost. So they don't have to hire delivery drivers anymore. They can use DoorDash and stuff, pass the cost on to the customer, and bam, they're competing with Domino's. And so they said that's the reason why our sales have actually been lower. No, I actually got a chance to listen to this. There was an analyst that's very cleverly pointed this out on the conference call. But what Domino's Pizza is doing is so you've got their locations, right? It's a franchise. They got a location here, they got one over here, one over here. Well, they're saying, okay, in order to compete with some of these smaller companies, we have to be closer to the customer. So although we had a store here and we had one over here, let's put one in the middle. So if we put a store there, now we're closer to the customer than we were before. If we have a store over here and a store over here, let's put one in the middle. Right? So they're doing this massive expansion. I forget what they call it. There's a name for that when franchises start plucking stores in between their existing stores. And so that's what they're doing to be closer to the customer, and that's what it looks like on paper. When you look at the financials, what it means is the store that was already there and the store that was over here, now their sales are less because there's a new store in the middle and it's stealing all their sales, or some of their sales, right? And so what happens there is you end up with lower store sales and their financials don't look as good, at least in the short term. In the long run, if they can be closer to the customer and they can acquire new customers, do you care about this? Does this mean bottom line is that's what's hurting their store sales, even though they didn't want to admit it there. You can clearly see it on their financials and their comp store sales as well, and same store sales. Anyways, you also have Papa John's. They're kind of over that whole controversy. Remember when Mr. Papa John's himself said the bad word there? Shouldn't have said that. The way he said it, yeah, that's a whole story. But anyways, got in a lot of trouble for that. They since kind of rebounded out of that. A lot of people starting to take them serious again, which means less sales for Domino's. People are okay. They're not emotional about Papa John's anymore. And so that's my long story. Did that matter? I don't know. Sometimes I feel like none of this stuff matters, but I just talk about it. Well, as you can imagine, the Chinese-based stocks, I looked through a handful of the popular ones. They were lower on the day. Alibaba down 4%, JD.com down, about 4% on the day. If you want to look at YY, it was not a very strong stock in general, but YY down on the day. You got to put in like Baidu in the mix there. Looking weak, down about 2%. And so, that's basically all the China back and forth that we have going on. Anything that you see in the semiconductor space and you see in the Chinese names, that's really what you're dealing with there. That's a little bit loud now. Sorry about that. A little jazz going on. That's what we do. All right, so Target in the news here as well, up about 0.5%, still working off some of that earnings pop there. Great earnings announcement, everything looking good. Well, old Raymond James getting around to upgrading them here today. They said, we're going to upgrade the stock because we believe that their earnings growth will be close to 10% going forward. If that's the case, that's really impressive. So their analysis says that. They upgraded the stock. They got a $130 price target. You can see we're at 108 right now, so they're very optimistic on that one. That's 20% higher. Average price target is about 6% higher at 115. Probably a little more realistic. However, realize these guys have 12-month time horizons, so that's how they're being measured. That analyst that upgraded the stock has a 57% accuracy rating. It's pretty good. 7% growth on his calls there, so it's not bad. If you look at the stock in general, it has 16 buys, 7 holds, and not one person is on the sell side, so that's good news if you happen to own that stock. As I was looking around at all the different stocks today, yep, I went through all of them. You kind of look at the airlines. Airlines were higher on the day. American Airlines did well. The real excitement came from Hawaiian Airlines. There you go. So HA is the symbol if you want to follow along. Smaller airline. They're up 7% on the day. Hawaiian Airlines basically said we've got higher traffic, lower fuel cost, cost per mile per active, or per seat, revenue per seat per mile is how they say it. Better than expected and expected to move forward. They report earnings on October 29th, so we got a little preview into their sort of earnings there. And so because of that, you had even if the airlines weren't positive today, American Airlines was, Delta Airlines I believe was down just a touch, still kind of hung in there relative to the rest of the market. So I thought that was kind of interesting. It's early to tell, but they still have that. And interestingly, Delta reports earnings next week. So I don't know what the day is just yet. They report earnings next week. The day of their earnings, so if you go back to this guy here, here's their earnings right here. The day of the earnings coming out. See, I was positive that day. We go back over here, day of earnings, positive on that day as well. If you go back the last 8 reports, it's been positive on earnings day. So it's got good stats there if you like seeing, will the stock be higher or lower when they report earnings. Last 8 reports been higher. More interesting than that, this is the 3rd quarter earnings announcement that they're going to come out with. You got to go all the way back to 2013 before you can find a 3rd quarter where the stock was negative on the day they reported earnings. I think it's interesting. No? You guys leaving? All right, let's move on here. You got 31.8% of the S&P above the 50-day moving average. That's not good, right? We were at 46%. We were as high as 69% a couple Fridays ago. You can just see deteriorating across the board. I like to point these things out. You had only 20 names out of that 31% were positive on the day. 96 names in the S&P 500 are 2% or more higher than the 50-day moving average. So essentially what I was trying to do was run a study where we say, okay, there are still some stocks above the 50-day, but how far above are they? Are they really close? Is that number going to go from 31% of the S&P to 25 and to 20 really easily, or are these stocks much higher? So let me give you an example here. Higher than 2% away from the 50-day moving average. So let's pull up Home Depot. So Home Depot is still above the blue line, that's your 50-day there, and it is more than 2% above the 50-day. It's about 2.5% where it closed on the day there, right? So still a little bit there. What that tells you is one bad day for Home Depot, and we could easily be under the 200-day moving average. So it's really not that kind of, there's not really as much of a cushion as you might think. If we look at Verizon, so Verizon's about 3% away from the 50-day moving average there. This one's not so active, so we've got a little bit of a cushion there. And I was trying to sort of look for stocks like that. There are 29 stocks in the 505 names in the S&P 500. You have 29 stocks that are higher by 5% or more. That's not a lot, right? To me, it doesn't seem like a lot. KLA 10 Core, CLAC, is one of them. Got about 5% here from the 50-day to its current price. Nike is another one. If you care about this sort of thing, you can see the distance there, a little bit larger there. It's about 7% away. And Dollar General, I think, was the other one. Oh, yeah. Dollar General is about 8% away from the 50-day moving average. So not a whole lot of names with a lot of room to wiggle before they start moving under the 50-day moving average as well. 29 of them, you would say, we're probably safe for now unless everything falls apart. And another thing to point out, that these names, this is a way to identify relative strength, right? So if Dollar General hangs in there and the markets sell off a little bit and everything gets a little scary for a moment, but these sort of hang in there above the 50-day, where do you think people that want to put money to work when they think the markets are at some kind of a bottom, where do you think they're going to go? They're going to go for the strongest stocks they can find first. So very quickly you go, there's my list of 29, right? And if they hold up, some of them are going to drop off. It's not going to be great. Some of them are going to hold up. And those are the ones that you'll see. I mean, they'll find the strength a little bit sooner than the other ones there, if that's what happens. If the markets just bounce from here, then yeah, you got strong stocks that a lot of people will focus on, or at the worst case, they won't sell. They'll just hang on to them. So there you go. Anyways, you got 5 new highs on the week. You had 3 REITs, 5 new highs on the day. So you have 3 REITs and a couple home builders, DHI, up 1.13%, and Lennar, which actually finished lower on the day by 0.3%. So this is one of our stats. This is one of our stats that we're giving you here. So Lennar, 2 days ago, we said, all right, over the course of the next 5 days, it's supposed to fall about 1%. Drew a line on the chart. Today, although it hit new highs, I think people realize those stats as well. It's a little overbought in the short term. It's got 3 more days to make it down to that line that's on the charts for it to be another statistical success. If you never saw that or you were wondering what it was, 66.6% of the time the stock is lower by 1% from the other day because of its extension there and sort of overbought position there. So I think you guys like those. So I focus in on those for you just so you have some fun with it. What else do we have here? Tomorrow we got the FOMC minutes. You also have Mr. Jerome Powell speaking today, but he really got a lot of attention today. Tomorrow's really not, it's not really going to be anything new, I don't think, that we don't know. What else? You've got Legg Mason and Ethan Allen, I believe, paying out 21 cents, 40 cents and 21 cents respectively there. Yeah, a lot of upgrades, downgrades today, just so many. I mean, I think it's because there's always upgrades and downgrades, but I think it was more of a focus today because there just wasn't much there. Microsoft upgraded today at Jefferies. Oracle was downgraded. They're adding 2,000 jobs or something like that in the cloud services division. It's about time. We talked about Target. I'll basically take your questions now if you have any. While I look through the rest of this, we'll let you catch up. I think we're good. There's not much there. The moral of the story is trade and earnings. For now, it's going to be earnings revisions. If anybody gives any update, like Hawaiian Airlines did today. Although it's not earnings, it is sort of a revision to their expectations, and that'll get attention, of course. Starbucks did what Domino's did what Starbucks did years ago, I think is what he meant to say. Yeah, they did the same thing. Starbucks basically just went nuts, flooded the world with all these Starbucks. You could walk from one to the other, and maybe overdid it a little bit. Yeah. That's why you're here, is for the geeky stuff. All right. We'll try to turn it up a notch for this earnings season because we have some new tools and things that we're using here with the data that we can share with you. So maybe we'll try to go a little crazy. So the question is, what is the S&P 500 support level? Well, so here, you've got two, really. Try to help you out. You got short term and you got midterm. So here's the S&P 500. We know this is now technical support. It's been proven to us, even though I wasn't all for it there, admittedly, right? It fell back down in this trend line. That's what everybody's paying attention to. See how clean and simple that kind of is there? So on the way back down, if we touch that and we hold, any kind of reversal would be good. I can tell you it's not really good for right now when a stock or any market comes down to support and does not just bounce convincingly off that support. The fact that it turned around and retraced there, most technical traders are already waving the flag that this is going to break. That would be their assumption anyways. And then the next big support area is the 10% pullback, right? That's what everybody's looking at there. I left the line in red so you guys can see there. And so that's what you have. Hope that helps. Hello, hello. What are your thoughts on Wynn as a mid to long-term play? It got rocked. So Wynn Resorts is very news sensitive here because of Macau. So it's been weak there. Well, you got a line in the sand, right? So from a technical perspective, everyone who bought the stock is going to use the same area right where you're at right now. Think about what's happened. If we can just draw a quick line here, I won't go crazy with this, but if you imagine you didn't know what the stock was going to do, and you bought the stock somewhere along this way. What would you say would be your exit I'm wrong price? Probably under this low. So you're like, okay, no problem. Oh, wait, all right, I'm right. This is great. Okay, enjoying a nice little profit. Then it falls back down. You go, I'll tell you what, as long as we don't get much under here, I'm good. I'll hang on, right? A little rally, whatever. Now imagine people here going, hey, look where it bounced last time. I think I'll try it and I'll buy it. And if it falls below this here, then I'll get out and I'll just walk away, admit I'm wrong, and that'll be the end of the day. So now you got the same thing going on, right? People that have been buying all along here, all using the same area as their stop. If you get below that there, you've got a really frustrating sort of reason for the stock to break below that, and the $100 mark, by the way. And the next support area would be 90 bucks. That's where everybody would look. So that takes like my opinion out of it and just puts the psychology of people and their stop losses. Where will they admit defeat? It's very, very close to this. I'm not sure if you want to play along with them or not, unless you really want to have a tight stop, but not looking good in the short term. Not a real good one there. And it is a very, very volatile stock. Do you think FedEx is extended in the short term? No, not extended in the short term. I've been mentioning this a few times as it's fallen. It is yet to really fall in a way where it is becoming extended, right? So if you look at the charts there, it's grinding. So there's a difference between grinding lower and falling out of bed, right? Just an abrupt sort of drop there. Nowhere near that. We do not have any days where there were big down moves on higher volume indicating any kind of fear or anything. So yeah, it's just grinding at the moment. I mean, I know people want to look. I get the idea of people going, it's FedEx, buy the discount. I don't think we're there yet. Yep. What's the support on Disney? So Disney's a little different animal here. You got the 200-day moving average, and everybody is sort of okay with that right now. Everybody's, oh, this makes sense, right? Got a good support area. We know everybody's looking at it. And so for people that have bought this stock recently, there's no panic. There's no reason for them to get out of the way just yet. I'd even maintain that if it broke through that a little bit, the excitement of that drop would probably be a buying opportunity for most people. I think they'd probably use that as a buying opportunity. So we'll see. Ulta, this is where you expected to take a break, right? Got a little too far, too fast there. Everybody chasing news, chasing what the company's doing. Remember the people that bought the stock, your CEO and your chairman, bought a lot of shares there. But remember, they themselves have said they're throwing in and giving up for the year, essentially, right? They're betting everything kind of on a holiday season there. And so until you know more of that, there's no real reason for a consistent and impressive type uptrend. I think you're within the range here where it just settles down and kind of chills out for a little bit, and that'll be the end of it. I think there's a fly in here. Yeah. Okay, let's see if I can help with any other questions, and we'll wrap it up there. Is bet on the VIX a good hedge? You can. I mean, it just depends on how you go about it. Can you use it as a hedge? You can. There's also the argument of, well, if you're going to buy protection, why not just raise cash? It doesn't cost anything, right? So the cost to carry a VIX position versus taking your cash out and putting it in some sort of money market or sweep account or something like that, you got to weigh the two there. It's always an issue for us. We can't, as portfolio managers that we have, you'll never see us in the VIX because the cost to carry it is way too much. The rate that we can get as far as any kind of a money market or sweep account that we have is better than the cost to carry the VIX. So if you're really wanting to hedge, maybe cash is an option provided that it's in some kind of a interest-bearing vehicle or fund. Is there any correlation between the percentage of S&P stocks being above the 50-day moving average, say only 25 or 30, and the S&P spiking positive on the next day? Day by day, I don't know. That's a little bit more detailed than I've ever gotten. Yeah, I can't say. I could not give you an accurate thing on that one. Will Aurora Cannabis ever come back up in the short term? You should take your losses and move on. You should always have a line in the sand, first of all. You buy a stock, you go, I'll let it wiggle a little bit, and then, you know, if it falls, I'll admit defeat, and I'll look for another opportunity to get in versus holding a sort of a bag. And so you have, in the short term, a little extended. Here's the thing I would say. On this one here, let it see if you can find it that makes its low first, right? It seems like it's attempting to make a little bit of a low. Let other people buy and try to guess the bottom here and then see if it holds. If you get a little bit of a bounce off these lows, this is where you say, all right, fine, I'll walk away. If it trades below there, now that I've seen it bounce a little bit, I would expect that everybody else is going to get out of the way as well, so I'll do the same. So at least you have a game plan there. And then my second suggestion is develop the game plan ahead of time. Play offense all times. Always play offense rather than defense when it comes to your dough, especially with your investments. Yep. Is CMG, so I don't know, like, is CMG worth getting in at this point? I don't know what you're shooting for. Like, is it just to day trade it or like a couple day trade? Is it like, you know, to hold it for a month or something? That's a tough one. Cool. Broadcom affected by the trade talks? What are the stocks not affected? So is Broadcom affected by, absolutely. Broadcom's affected by that. I'll try to pull it up here. AVGO, there we go. So a little bit weaker on the day today. I would kind of argue the same thing I said earlier, where you don't have a real reason to be excited to buy it, excited to sell it. You don't have a reason to be scared to sell it, right, if you're holding it. And so you kind of like, what do I do? I'm in between. I'm in no man's land here, so it's a tough one to have any kind of help on that one there. You contributed to your IRA from your stock account earlier this year for 2018. You meant so you're trying to you're just sharing that with us. Thanks for sharing. All right, so that's all we got for you here today. Hopefully we covered everything in the way that helps you out there. We'll be back tomorrow, of course, to do this all over again. Enjoy the rest of your day or evening, and thanks. I appreciate you guys watching and keep us in mind here at Jazz Wealth. We'll talk to you tomorrow.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.